All right, Matt, I want to welcome you and thank you for being here on Follow the Money Radio. Great to have you.
Yeah, thanks so much, Jerry. Appreciate it.
Absolutely. Well, let's just get started right off with a little bit about your background. How did you get started in the world of self-directed IRAs?
Yeah, so I mean, right now I'm a attorney and partner at KKOS Lawyers, but I'm also CEO of Directed IRA. We have over 10,000 accounts and $1 billion of assets. But it really started back in 2006. I was an attorney, just had a client that wanted to buy real estate with their IRA, and I was like, I didn't learn this in law school. It wasn't on the bar exam. Frankly, I'd never even heard of it. And so I had to help start figuring it out and help the client. And from there, I really just loved it because I loved helping the client do what they wanted to do with their money, invest in what they knew. And then I ended up writing a book, becoming an expert on it, speaking nationally, representing half the companies in our industry. So that's the genesis of it.
You know, there's a tremendous interest in the idea of self-directing your IRA, but many who are listening right now, they may not know what that means. Can you explain what a self-directed IRA really is?
Yeah, I mean, think of a self-directed IRA just like an IRA that can invest in any asset allowed by law. So if you got an IRA at Fidelity, Fidelity's going to let you invest in stuff that they sell. So that, they let you buy stocks, bonds, and mutual funds. That's what they sell. If you have an IRA at Northwestern Mutual or New York Life, they're going to let you buy stuff that they sell, like annuities or other products like that. So a self-directed IRA is essentially an account that lets you invest in any asset allowed by law. Most commonly, people are buying real estate. They're investing in LLCs, like that are buying an apartment building, or maybe it's a combination of partners involved. They're investing in private funds. People are doing crypto, small businesses, private money lending. So just think of your IRA being able to own a rental. It owns it, it gets the rental income, and it gets the gain when you sell it. Pretty simple.
So you've already answered the question in some ways, Matt, but let's just really drill down. Why is self-directing a good option? What are the advantages over an IRA, say at E-Trade or Fidelity?
Yeah, so for some people, they have deals and opportunities. They know real estate. They know a private fund that's going to do better. They know a small business opportunity in their community they can invest in. So they can get a greater rate of return by investing in these things that they know. A lot of people feel like, well, the stock market, everything's already priced in. I might love Apple and think it's going to be a valuable company in the future, but so does 100 million other people that own the stock, So that's already priced into it. Well, if I'm a real estate guy and I can find deals and opportunities, I can buy stuff at a low value that I can turn around or that I know is going to increase in value, and I get bigger return in my retirement account. I think that's why a lot of people are attracted to it, but it's not for everyone. Like if you don't know real estate or crypto or a private fund or small business, then there's really no use for a self-directed IRA because you've got to have an investment to make with it once you set it up. So the ones that I've seen be the most successful at it is they're already successful in something else. I have a client that does equipment financing as a business as day to day. He uses his retirement account to lend to people to buy equipment, and he gets, 2 points and 10% interest on it. He knows he's getting a way better deal than he could get in the stock market by just doing what he already knows and does. And so when people realize that and, oh my gosh, I can grow my wealth by doing something I know and I have a competitive advantage on it, that's when the self-directed retirement account becomes really valuable.
Let's talk about some of the things that you can actually invest in with the self-directed IRA. What are some of those options? What are the most common investments that these IRAs hold?
The most common is like the single family rental. And that was the first self-directed investment I did. So like in 2017, I used my retirement account, set up an LLC. The retirement account owned 100%. LLC goes and buys a single family rental. I bought it for 80 grand, put 40,000 down. I'm actually selling it right now for 185. Now I've had this for 5 years. Now I invest in real estate and typically buy rentals. I got a day job and everything. I'm not going out flipping stuff. And so I saw the opportunity for the real estate deal and I thought this is going to do better than what my retirement could otherwise do. And so the single family rental is really common because it's easier to get into. People like it because they have 100% control if I want to sell it myself. I'm not partnered in a fund with other people, though that's probably the second most common. But we have lots of clients. They'll flip properties. They'll wholesale properties. So the real estate investor client is very common. And that's just real estate of any variety. We've had clients buy water rights. We've had clients buy air rights with their retirement account, all these different types of assets that they think is going to have value, that they think they're buying at a good deal that will sell for an appreciated value later. That's the stuff that we see clients buying. But private funds are really number two. That's the second most common. And those could be private equity funds, venture capital funds, real estate funds that are buying apartment buildings or what have you, crowdfunding deals on startups. So that's probably the second biggest category. Then we see a lot of private money lending too. A lot of successful clients that just simply do that. And they're, like I give the equipment finance client example earlier, but then just like people lending to real estate flippers, other businesses, and taking their inventory or things as collateral. I mean, those are all very, very common self-directed investments. They're basically just playing the bank. Let me just get interest in some points. I'm going to play the bank, get an asset as collateral, and I'm just going to grow my retirement account that way.
You can also invest, I guess, in cryptocurrency. You can do physical precious metals. There's so many different types of assets. Now, there are some limitations on what you can invest in or what's available that what you can actually put into the self-directed IRA. Can you talk about those?
Yeah, I mean, the nice thing is there's only 3 restrictions. It's crazy. A lot of people are like, I didn't know your IRA could buy all this. Well, the tax code kind of doesn't tell you what you can buy. It only says what you can't. So the first one is collectible items. So you can't buy collectibles. And when retirement accounts first came out, you actually could. So people were buying art as an investment in their retirement account. They were buying, antique cars, and, but there's a lot of abuse on collectibles, like the antique car was getting driven on the weekends, and the wine collection they bought as an investment turned into a bottle collection, And so they're like, collectibles are out. They're like these quasi-personal assets / investments. So collectibles are out. Now on the collectibles, though, there are certain exceptions to the rule that you can't own collectibles, and the exception would be precious metals. So gold, silver, platinum, and palladium. You can own physical precious metals in your retirement account. There's certain purity requirements they got to meet. I have a whole chapter in my book on precious metals. There's free articles on my site too on which ones qualify. So collectibles is the first restriction. Second is life insurance. You just can't buy life insurance in an IRA. It's a restriction. Most people aren't trying to do that anyways. And then the third one that does come up is S corporation stock. So IRAs just do not qualify as a shareholder under S corporation tax rules. So they just can't own S corporation stock. But IRAs, of course, can own C corps. That's what you get when you buy publicly traded stock or you're investing in a startup. Most of those are C corps. And then the most common for us is LLCs. IRAs can definitely own LLCs, whether it's 100% or partnering with other people on an LLC or investing in a fund that's an LLC or a limited partnership. So, but that's it. Can't buy S corps, life insurance, or collectibles.
Wow. Okay, so there's plenty of advantages here to self-directed IRAs, but there's obviously some disadvantages, maybe fees, extra rules, regulations, paperwork. What's some of the downside here for the self-directed investor?
Yeah, the first thing I like to tell people is, even if you are good at something, let's say real estate, and you want to buy real estate with your IRA, well, you got to learn the rule book first on how IRAs work. It's kind of like playing a board game. So you can't just open it up and start rolling the dice and moving pieces around. You're going to screw it up. It's the same thing using an IRA. You've got to learn the rules first. Play with someone you know that's done it before, or read the rule book. But once you've done it a couple times, it's the same thing over and over again. So while there are some rules, it's not complex, and you just got to learn it once. So the first couple rules are, keep in mind, when we're talking about assets your retirement account's buying, we're talking about investment assets. So when I say you can buy real estate with your IRA, I'm talking about an investment, like it's got a tenant or a property you're going to flip. I'm not talking about like your second home that you want to live in, that you want to summer in or something. Or you can't have personal use of assets. That's one of the first rules, and that comes under what's called prohibited transactions. So if your retirement account owns a physical asset like real estate, you can't have use of it. Your spouse can't, your parents, your kids, there's all these people called prohibited parties. They can't have use of the assets. And that's really the biggest rule, is no use of assets your IRA owns. The second one that's related to it is you can't move assets from your personal name or companies you own over to your retirement account, or vice versa. So because retirement accounts have great tax benefits, right? When I own something in my IRA and I sell it, I don't pay any tax. So we'll have clients call us all the time. Hey, I've got this asset I own. It's appreciated a ton. Can I throw it over into a Roth IRA and then I'll sell it from my Roth IRA and pay no tax? No, Congress thought of that when they wrote these rules. Okay. So if I have, real estate that I owned for 100 grand and now it's worth 300 grand, you can't sell it over to your Roth IRA for 100 grand, pay no tax, and then sell it from your Roth IRA for 300 grand and avoid it by using the Roth IRA. So the rules don't allow you to move assets from you or your spouse, kids, parents over to your retirement account.
Let's talk about those fees as well, because typically when somebody sets up an IRA, maybe at E-Trade or Fidelity, it's pretty straightforward. They don't really have a lot of nickels and dimes that they have to pay. It's pretty straightforward. How is it different with the self-directed IRA?
Yeah, so companies do it in different ways. There's really two different fee models that are most common for self-directed companies. One is just a flat fee model. That's an annual account model. And that's what we do at Directed IRA. Our fee is $295 a year. I would say the average, if you go shop them and price them out, is probably $400 to $500 a year on this model. We just happen to be a great deal, but it's $295 a year. And then most places are going to have a new account fee of $50 to $100. Ours is $50. And then you'll have transaction fees when you do stuff. You buy something, you sell something, you want to wire, there's typically fees in the $50, $100, $20 on doing small things. So let's say to open an account with us, and I'll just walk you through it. You have a $50 new account fee, $295 annual fee. Then when you make your first investment, that's $50. When you sell the investment, that's $50. And now every year you have the account, it's $295. And so there's other companies that operate in a similar way. They just have a little different numbers there, where it's kind of like an annual fee and then fees when you're doing things. The other model is like a percent of the asset. So it might be like, 50 basis points, or 100 basis points based on the size of your account. So if you have a large account, you're paying thousands of dollars in fees at those institutions. Those are almost always going to be more expensive unless you have a very small account. So make sure you run the math on any of those that are based on a percent of the size of your account, because right at the end of the day, you're hoping this account is large in 10 years. And all of a sudden we've had lots of clients. Since I've been doing it since 2006, of clients, that started with a couple $100 grand and now it's like $1 million, and they're at those old companies and they're paying thousands in fees now.
Yeah, that's one of the things we have heard many times about self-directed IRAs is some of the cost prohibitive fees. You almost have to have a certain amount. Would you say there's a certain amount someone would need to justify self-directing an IRA?
Yeah, it kind of depends on the asset. So when crypto came around, it all changed, because we'd have clients set up a crypto account. They just drop $6,000 in a Roth IRA, or, $5,000 in an HSA, or $2,000 in a Coverdell, and they're paying us $295 a year. But they're making that investment because they think that thing's going to go 10x, 100x. They have this expectation in 10, 20 years, this account's going to be huge. And so they're fine paying that $295. But if you're doing a private money loan at 10% interest on a $10,000 loan, I'm making $1,000. There's some risk in that, and I'm paying you guys $300 of that. There's just not a lot of, it's going to eat into your return. So now if you had 100,000 and you're making 10,000 in interest and paying us $295, that's much more, reasonable. So you kind of want to look at the asset you have. Our average balance is around 100 to 130 grand. Kind of fluctuates depending on some things, but I'd say it's around 100 grand, let's just say, is the average balance. But we have clients with our largest client, it's separated in different accounts. My largest client is over 300 million in a Roth IRA. But then we have people with $1,000 in their account too. So it just depends on the investments you're looking to make. One thing that for someone new is think of the investment you're going to make, and that's going to determine how much you're going to need. A lot of people open the account and we end up closing it, and they're like, well, I didn't find a deal. Well, how much money did you have? Well, I had nothing. I didn't have anything to roll over. I had no, okay, you can make your 1 year contribution of $6,000. That's not going to get you very far. So we always want to look at what they're investing in to try and figure out how much they need.
That's helpful. That is helpful. Now, we've long taught the benefits of tax-free growth from Roth IRAs. I'm a fan. I'm a fan, especially if you have a long time horizon before you're going to retire. It just seems like taxes are going to be higher 20 years from now, realistically speaking, considering where they are now. I guess the question comes here is, can you self-direct a Roth IRA? And I think you've kind of already hinted at that. And which type of IRA do you prefer, or do most of your clients prefer? So I've already kind of stated I like the Roth. Can you use the Roth in the self-directed, and what do you like?
Yeah. Oh, absolutely. I'm a Roth guy too. But even myself, I have some traditional accounts, you know?
Sure.
So, and here at Directed IRA, actually our most popular account is a Roth IRA. The second most would be traditional IRAs. But actually we have more assets in traditional IRAs. And really that's a feature of most people who self-direct are rolling over an old employer 401k.
Right.
And they got hundreds of thousands of dollars that they've put in over the years, and it's all traditional for the most part. And so when they come over here, they end up having a traditional IRA. So that's really the most common account or dollars you see are traditional. But in new accounts, Roths, people are, we're always preaching the Roth because it grows and comes out totally tax-free.
Yeah, it's hard to beat.
And so and we have a lot of clients converting. I mean, every day we have someone converting traditional dollars to Roth and trying to get more of their money over to Roth. So, because, if you think about, a lot of our self-directed clients are hoping for big returns, and they're actively involved in their money, and for someone actively involved in the investing and what's going on, they're paying more attention to the difference between traditional and Roth. If I got a financial advisor doing it that's not attuned to this stuff for me, that doesn't get into the nitty gritty on this stuff, they may not be as caring about this. And so with a lot of our clients, they're a little more in tune with their money when they're self-directing. So they're more likely to do Roth. And that's why I think we have more Roth accounts than most typical companies in our space. But I love the Roth, and I'm trying to get more over there, and always putting the max I can Roth in every year.
Yeah. And the Roth, of course, the IRA comes in a traditional or a Roth flavor. Now, IRAs are probably the most common that people think of when they think of retirement saving vehicles, but that's not all that you can self-direct. There's other types of accounts. Can you go through some of the other types of accounts that can be self-directed?
Yeah, one of the most common would be a solo 401k. That's really common for self-employed clients that have no employees. Think of like the real estate agent. Makes good money, doesn't have a 401k plan at the brokerage. They don't have employees themselves. They might have some 1099 or work with other agents, but they're a perfect candidate to do a solo 401k. And basically what that is, it's a 401k for yourself. So because you're self-employed, you're your own business owner, you can create a 401k just for you because you're the only employee. Now, if you have a spouse that's involved in the business, you can add them and still do the solo K. But the solo K is awesome because it's easy to self-direct. If you have employees, you can self-direct, and like our 401k is self-directed, but it's pretty complicated. Even myself that does this every day, it's kind of a pain because there's all these rules with your employees and yourself as the business owner and what you can and can't do. But the solo K is really nice because it's just you. You can do whatever the heck you want, invest whatever assets you want. You don't have to offer it to your employees because you don't have it. And so throw 60 grand plus a year away into it that you can invest and make contributions. It's an account you can grow really fast. So that's a pretty common account over here. Again, for small business owners, people self-employed with no employees. That's the solo K. You can do a self-direct and HSA. So my partner, we have two podcasts, I know our Main Street Business podcast and Direct IRA podcast we do together. I mean, he's bought cows with his HSA, so you can self-direct an HSA. You can self-direct Coverdell's. We have clients that did those. Those were actually really common when crypto was hot. People wanted to do the Coverdell, throw some money away for their 2-year-old kid. They think in 16 years or so, this could pay for their college. Who knows? I don't know. But then, I mean, the SEP IRAs. I mean, these are all things you can self-direct. Really, any retirement account can be self-directed. The tricky ones are the business owner that's got a 401k with employees or some other employer plan that they have employees. You start getting into some rules and issues on providing the same, options to your employees. It just gets very expensive. So really everything else is fair game and can be self-directed though.
That sole proprietor who's out there listening and he's maybe stuffing full a Roth IRA, doesn't have a 401k. He's just almost a perfect candidate for this, isn't he? A solo 401k where you're able to then contribute much more than the 6,000 or whatever the current limitation is on a Roth IRA. You're able to I don't know what the current max is now on a 401k, but it's much higher than 6,000.
Still 6. Yeah.
Well, I mean on
so the
on
Roth's
the
still
401k.
6. So it's like 61 right now. So is what you can do for 2022 into a 401k. And you can do some Roth dollars in that too. So the nice thing about a solo K is you can do Roth dollars in it and traditional, do all Roth. So the solo K's got a lot of flexibility.
Yeah, definitely. Let's talk about some of those success stories you've seen. You mentioned one person, one of your biggest clients that has, lots of hundreds of millions of dollars.
Yeah.
Let's just talk about a few of those, perhaps to inspire those who are listening, because this is something that can really work out for people. What are some of the impressive stories you've experienced, either in your own IRA or in your clients?
Yeah. So, I mean, the one that made me decide to become an expert on this topic and I'm like, this is going to be my thing, was a client back, this is, I don't know, 10 plus years ago, 15 maybe. He had a Roth IRA. He was a real estate developer and he wanted to buy some land against the freeway. And it was all agricultural land at the time. And so he went to the owner of the property. He said, hey, I want to buy this property from you within 5 years. I just want an option on it. I'm not going to buy it now, but I'll pay $450 for it. It's really worth $350 right now. And the farmer knows that because he could go buy acres down the road. It's the same stuff to go do whatever he wants to do at $350. So, so the farmer agreed to it. My client put down $10,000 from his Roth IRA. He basically converted some traditional dollars he had and made a Roth IRA. And that Roth IRA put down the $10,000, but owned the option to purchase the property at $450. And he had 5 years to do it. Now, what my client knew was the state, the county, were planning to put a freeway exit right there. And he knew that that land was going to turn into freeway commercial and be worth over $1 million. So, in fact, it ended up being like about $1.5 million. So later that happens, freeway goes in. He then sells his option to another real estate developer for over $1 million. Now the client put in only 10 grand from his Roth IRA.
Wow.
And ended up getting $1 million return.
What a return on investment there. Wow.
Right. Now remember this one for a number of reasons. I've had clients make bigger returns than that, but I remember this client because I remember when this happened a few years ago down the road and we were talking about it and he was actually pissed off. And I was like, what? How are you mad? And he's like, I am just so mad that no one told me about this before. I have the big law firm, the big CPA firm, one of the big four. I have a financial advisor. They all knew how I made money. They all knew I made it in real estate and made a lot of it every year. No one told me about this tool that I could do it. And there's certain deals I could do totally tax-free. And so, he's got a pretty significant account now, the other deals he's done. And so, but he learned how to use the tool. He had great investment opportunity. And now he just used that Roth IRA tool to invest in what he knew. And I was like, I got to get out there and help people learn how to do this. If this guy was, had all these investment options and opportunities, no one's teaching him how to do this or helping him along the way. So that was the first one. I'm like, I'm just got to freaking be an expert on this. I need to write a book. I need to just get out there on it.
Wow. Well, now not everybody is going to have that kind of success. And in fact, you would imagine that there are some people you have known, I know as well, who if you gave them that power, they might blow it up. They might blow up their retirement. What are some of the pitfalls that you've seen with self-directed, and how can people avoid those?
The first thing I'll say is know who you are. Know thyself. This guy could be a home run hitter. I'm not a home run hitter. I don't get those pitches, those deals coming to me that I can hit a home run and make $1 million off 10,000. I don't. So I know myself, and I know I'm also busy. I mean, this was a guy that's a developer full time. He's in the mix. He gets deals. He sees what's going on. He's doing this all the time. And he sees the right deal he can use his Roth for, drops it in. And I have lots of clients like that. And there may be people listening that are like, I see those all the time. I could use a retirement account to do this. Awesome. Okay. This could be really powerful for you. Me, I'm a base hitter. Okay. I know that I'm not in the mix on that. I know I don't get the best deals that run across my desk every day, but I can buy a single family rental, which is what I did. You know, I mean, I bought the single family rental in 2017 for 80 grand. I put 40,000 down for my retirement. I'm selling it right now for 185, and I've cash flowed at about 30 to 40 grand. It's been a great investment asset for me to have. To me, that's base hitting, and that may be a double or something in there, but that's base hitting. That's what actually most people are doing. And they're investing in the stuff that they like and know, even if they're not like, you know, getting these amazing deals and opportunities. But what I will say is, what I've noticed for clients over the years too is they get better, you know, and I think this is just in anything, you know, once you do it a little bit, you get a little bit better, you find the stuff you're good at, you get in a groove, and the clients that have the biggest accounts really just do the same thing over and over again. They're not investing in startups and buying precious metals and buying rentals and flipping a property and investing in a private fund. They're doing the same thing.
They're doing what they know.
Over and over. Yeah, they're just staying in their lane. And so, so those would be my first things. Just know who you are. If, you know, don't swing for the fences if you're not the type of person that gets to see those awesome pitches coming across the plate. But also, it's fine. You know, Moneyball taught us base hits, just get on base. You know, that scores runs. You know, you don't need the home run hitters. And that's kind of the investor I am. And I think really most people self-directing are. They're just getting on base with the stuff they know and doing it over and over and over again.
Let's switch gears to crypto again, because we were educating our audience here at Follow the Money back in 2012 about Bitcoin. We began investing around the same time. And a sizable portion of our audience either invests in cryptocurrency or would like to learn more about it. So speak for a moment to these listeners about how cryptocurrency fits into a self-directed IRA or 401k. It's a new space. There's quite a bit of opaqueness around some of the regulations, or maybe it's kind of a gray area. I'm even thinking of like a classic example of if you have the cryptocurrency in the 401k, you know, are you able to keep it on a hardware wallet? And then where does that hardware wallet have to go? Does it have to go to some special place, or can it be in your house? I mean, you think about some of these, the lack of regulation that we have. Talk to the crypto investor who's thinking about self-directing. What does he need to know?
Yeah, I mean, crypto has been the most popular alternative asset the last few years, you know, hands down. And it's something we got into in 2017. I actually bought Bitcoin with my retirement account in 2017 because I had so many clients ask me about it. I'm like, I don't even know what the heck you guys are talking about. And I knew I couldn't understand it until I just did it myself. So I did a little experiment and bought 4 Bitcoin. It's $2,500 at the time in 2017. And it ended up being the greatest research project I've done, you know? So, but I've seen kind of the ups and downs since then, right? It kind of it dropped after that, it's up and it's down, you know, it's kind of been, you know, crypto's been on this roller coaster of it's going up, but it's definitely very volatile. So, but a couple things. First, you can own it in a retirement account. You know, we have a crypto IRA product at Directed IRA that you could do with any account, a Roth, a traditional HSA, Coverdell, Solo K. Any of those accounts can actually own crypto. Now, we partnered with Gemini for a number of reasons, but basically what our IRA does is it will own a Gemini wallet that is on the exchange at Gemini. You can take it off exchange there, but it's still at Gemini. And I'll come back to your, you know, hard wallet question. But our crypto product, basically you open up the IRA with us, you fund it, whether you move money over from another IRA or contribute to it. And then we are going to put the money into a Gemini trading wallet that you're a trader on. And you have full access to buy and sell whenever you want. You can use the Gemini professional trader status that they have in their exchange features. You basically pay 0.5%. 0.5% on trades. A lot of our competitors are 1%. You still pay the $295 annual fee, and then 0.5% when you're trading. And so that's been very popular. We've set up thousands of those crypto accounts, have lots of clients invested in crypto. And we like that model. It's kind of the easy method because you basically set up an account with us, fund it, and then you're able to go into Gemini, who has the tech features and capability, and they're regulated. Now, what you've seen in this last few years is there's been some breaches, of course, in the crypto space and the crypto IRA space at some of our competitors. There's been, of course, everybody knows all the companies that are in bankruptcy or receivership in the crypto space. And a lot of people used IRAs going over those places. And the reason we use Gemini is they're regulated as a financial institution. These are not their assets. They're held as custodial assets. So even if they go bankrupt, their crypto's fine. And so that's kind of like us. We're a trust company ourselves. And so, there's a reason we use Gemini is because they are kind of regulatorily focused. And that kind of gets them in some, out of the discussion for certain clients. But at the end of the day, for us in the long haul in the crypto space, we felt like it was a safe place to be. So really, if you're using our crypto IRA product, you're basically, whatever Gemini has is what you can buy and sell. So you can't buy XRP and stuff like that. But they have stuff, they're always adding stuff on. They have Solana on there now. You have, Bitcoin, Ethereum. They're the most popular anyways. So, so that's what you're doing with the crypto IRA with us is Gemini. Now, you don't have the keys, though, right?
Right.
Like,
yeah.
It's on exchange, You can pay an additional fee, and they'll take it off exchange and basically do, like, physical storage where they're, like, storing it off exchange for you. But a lot of clients don't even like that. And they're like, no, my crypto, my keys type thing, Now, you can do that, but you have to then set up an LLC. So we've got lots of clients do that where their IRA owns an LLC 100%. Their LLC goes up and opens up a business or an institutional wallet that they then invest from and using this IRA LLC method. And we have other podcasts and content on that at directedira.com. We have a full webinar on how to do that strategy. It takes a little more money because you need to set up an LLC, which will cost you $800 with us. But it's a solution where you can have your keys. You can go buy crypto from wherever you want, whatever exchange you want to buy. You can buy it peer-to-peer even. You don't have to buy it from an exchange. And then you're operating out of an LLC structure.
With the coming tax tsunami, I mean, when you really look at the level of taxes, people don't realize it, but they are so historically low and they don't feel that way. When you look at the federal income tax or, the top marginal tax rate, you think, how is that low? But historically speaking, it really is. And so over time, with the deficit spending and all the things that we see going on in Washington, it just seems like taxes are going to have to go up. So stuffing money into a tax-free environment like a Roth, if you're going to be investing and you have a long time horizon, it makes sense, I think, for a part of your money, at least. And directing an IRA, self-directing an IRA or a 401k is how you do it. So I'm talking right now with Mat Sorensen. He's at directedira.com. I want to just close this out, Matt. This has been very informational. Share with our audience how they can learn more about your work, get a copy of your self-directed IRA handbook, and how they can start self-directing their IRA. How does that work?
Yeah. So if you go to directedira.com, you can open an account there. Just hit schedule an appointment. If you want to talk to one of our senior account reps, you can schedule with them. They're very knowledgeable, happy to help you. Or you can just open it up online if you're ready to go. Now, if you open it up online, though, use Follow the Money 50. That's a promo code we have for your listeners here, Jerry. Just enter that and you'll save you $50 on your new account setup. And but if you want to just learn more, if you're like, I got to learn a little bit more before I open this, we have so many resources on that site. We have our webinars, our podcast, and then there's my book here, of course, which you can get at Mat Sorensen. That's MAT20 Sorensen, SORENSEN, MatSorensen.com. It's on my site there. The book's only $20. If you want to just get the free playbook, I have a shortened version of this. It's kind of 10 frequently asked questions in a longer format on the site. That's a free, you just throw on your email there and you can get the free self-directed IRA playbook on the site. And then, like I said earlier, just when you start self-directing, just play with someone that's done it before that can advise you a little bit, or read the rule book. It's not rocket science. It's something that can be learned, and then you just do the same thing over and over and over again.
Very, very cool. We are happy customers of directedira.com. We're super happy so far with the way everything is going. So anyone listening today who says, I wonder if this is right, I encourage you to check out Matt's book at least. Matt, you said they can go to your website to get that again?
Yep.
Yeah.
Yeah, MatSorensen.com. My book's on Amazon too if you want to grab it there.
Right. And then they can go to directedira.com and get all of the information about the different accounts and how all that works. Thanks for mentioning that discount code. Yeah, you will save $50 off of a new account over there if you use the promo code Follow the Money 50. Save you $50. Matt, this has been very helpful. I know there's a lot of people today who are getting enlightened by this because this is a new idea. Perhaps maybe they've been putting this off. They've been thinking about this. They just didn't know where to go. Really appreciate your insights.
Yeah, my pleasure, Jerry. I always love talking about self-directed IRAs. So you asked me to talk about them. I'm here. And really, pretty much outside of this topic, you don't really want to know what I think. It's not very valuable.
Well, what you have to say here is very valuable. So I appreciate it, Matt. Hopefully we'll have you back again sometime to maybe talk more about it, especially as more laws become more clear about some of these things. Maybe that's one last thing I'll bring up is, do we have any kind of legal precedent, I guess, for crypto IRAs? Have we seen a judge deal with a crypto IRA, and have we seen anything that's strange or odd about it so far, in your opinion?
No, we haven't seen any, cases on it. There hasn't been any audits on it. And I'm following all this stuff. The only thing you've seen is the Department of Labor has came out on 401ks with employer plans and basically said, if you're letting people buy crypto with their 401k, you better be careful how much you're letting them buy. Because, Fidelity came out and was like, hey, we're going to let people buy Bitcoin within their 401ks.
Right.
And so, 2 weeks later, DOL comes out with kind of like this industry letter. It's like, hey, we're watching this. If you do it, just know we're coming into your office to look at it. And so I think, as the financial institutions have really been adopting crypto more and more, and it's still happening. I know there's like crypto winter out right now, whatever you want to call it, but it's still happening. We're just seeing institutions continuing to adopt and build. And so, so we will probably see some more regulation on it. The one we did ask, I didn't mean to dodge it, was the hardware wallet question on crypto is, that's kind of a gray area right now. What I'll tell clients is that's an area where I feel like if you're doing that, where you want to hold, you have a hardware wallet with your crypto on it, or at least the keys to it, I should say. The crypto's still on a blockchain, but I think it's okay to do it. But I just tell clients, if you're doing that, you need the LLC structure that I mentioned earlier, and you're a pioneer. And this is where we're going to see the regulation might go the other way on you. You might need to get out of that structure, or you might be one of the test audit cases, on it. And so we're not comfortable giving clients green light on that yet, just because there are some personal possession rules on retirement accounts for other assets like precious metals where you can't physically hold them. Right. Real estate, you're not supposed to physically use yourself. So what does it mean for crypto keys? Is that going to be the same? I don't think it will. I think there's a lot of distinction. For example, the crypto's still on the blockchain. Just because you have the keys doesn't mean you actually have the crypto. And so now, does the IRS and a tax court judge understand that though? So,
we'll find out, won't we?
Yeah, we'll find out. So I was going to say, if you want to be the pioneer, that's the one that finds out, go for it. We have clients that go for it. So we'll let clients do it if they want. But for me and just myself, and I mean, I've done a little bit of both. I have some crypto. No, actually, I have an institutional wallet it's still on the exchange, really. So I'm not even holding my keys right now. And so, I don't know. Everybody's a little different on that topic anyways, outside of the legal discussion, just, from a security standpoint. But it's a good question, one that comes up a lot. I hate to give it's a gray area answer, but that is one that is. It really owning crypto, that's not gray. You can do it. There's just the fact that, frankly, the DOL commented on how much you're letting someone buy in a 401k is basically saying you can do it.
Right. Yeah. So. True. That's a great point. Well, Matt, this has been so helpful. Thank you so much for being here. We look forward to having you back soon. Thanks a bunch.
All right. Thanks, Jared.